Hello, good morning. Kindly confirm you can see my screen at the moment. I need some. If you can hear my voice, kindly type in hi in the comment section. Okay, I'm not sure you can see my screen. I'm trying to get some technical support in that regard. All right. Good morning, everyone. I want to welcome you all to yet another beautiful session of Extra and Speed Life, hosted by my humble self, Sheriff Daramola. And as usual, I shall be taking you on a trading journey where we shall be evaluating the financial market. And we shall be using technical parameters to identify trading opportunities lining up for us this week. Okay, I think I got a confirmation now that you can see my screen, but at the moment I'm unable to communicate as I can't load my chat here. So let's keep going. Um, let's keep going till the chat comes up. Okay. So we shall be looking at the pairs we deliberated on yesterday, and we'll be looking at how this trades and position have been doing so far, after which we will be making our plans for today. So without further ado, let's dive into the chart and let's see what is happening in the market. Well, finally, the US oil was able to break the $92 level yesterday, and we've been seeing higher highs since the time it broke that level. So what I want to be doing here is to share with you how we got to the state by scaling up a little into the higher time frame where we want to be seeing having an holistic perspective of what our expectations were before we saw that breakout of structure. So if we scale up to the 4 hours time frame here, remember we had a level at the $92 level, which I said has been a major and significant determinant of price action in the past. We can see how this level has been holding price action, either supported or resisted at one point in time. So right now, during the last 24 hours, we finally saw the breakout of that level, which also shares a confluence with the bearish trend line, which was outrightly broken yesterday. So now that we already have a signal of a bullish momentum yesterday, well, what is going to be our plans for today? However, some people will have actually taken advantage of that move yesterday, or probably take advantage of that correction phase. Let me show you what I'm talking about here. Okay, let's go back to the 1 hour time frame, or let's go to the 15 minutes. I guess 15 minutes would be most appropriate at this point. So if we scale down further into the 15 minutes time frame, we will notice that after that breakout of structure here, we saw this correction phase that gripped the market throughout the late period of the New York session, right into the early hours of today, before we saw that breakout of that structure. So if you are taking advantage of that move at that point, kudos to you. As you can see, we had a structure here. If I bring out my line chart at this point, we can see that So we have this structure here, which was broken during the early hours of today. So it will have been a good advantage to take advantage of that move to the upside here. Right now, price is moving with about how many pips from here? Over 150 pips from this point had right now. So now, as we head into the New York session today, what is going to be our plan? What is our expectation on the US oil? Well, let's go back to the 1 hour time frame. And if we look closely into the structure that is evolving here on the 1 hour time frame, the first thing you will observe is since price tested the $85 mark last week, we've been seeing higher highs and higher lows here. So what I want to be doing at this point is to be connecting the series of higher lows to give us a trend line that should be guiding our action going forward. So if we bring out our line chart at this point and run our trend line right along that let's see, I think I'll be using this one. I think this one will be most appropriate to use at this point. So if we run that bullish trend line here, what do we have? So we have something like this. So this is another parameter that will be guiding our action during the New York session today. So what we want to be looking forward to is price coming back to do a retest of this level, where a reversal pattern on lower time frame will support a trend continuation to the upside. So if you are taking advantage of this move right from the breakout of the structure here, if you are taking advantage of that move right from the structure here, you want to lock in some profit at this point so that we don't get caught up in an unnecessary position at this point in time. So right now we have the structure. Let's extend the structure we identify on the lower time frame. So we have something like this. So we wait for price to come back to do a retest of that structure. So let's zoom into the structure here. Let's zoom in so that we can see what I'm talking about here. So we have this structure here which we identified on the 15 minutes time frame. We saw the breakout of that structure during the early hours of today. We saw the breakout of that structure, and right now we should be expecting price to come back and do a retest of that structure, or probably come back as far as that bullish trend line we identified here on the 1 hour time frame, after which we look out for reversal patterns or structures that supports a trend continuation to the upside. So this should be our expectation for today. That is for those who had missed this move this morning. So we should be looking forward to taking advantage of that move and using this bullish trend line here as our guide going forward. So we want to continue to see price continue to respect that level, that bullish trend line, to be comfortable in our bullish position. So that is the scenario we're looking forward to here on the US oil. And let's see how price action will play out during the New York session. Then at this point, after identifying the trading opportunities here, where will our take profit target be? Well, to get the take profit target for the US oil, it is appropriate that we scale up to the higher time frame, where we should be able to see the structure clearly. And remember, I shared something with you yesterday. For those who are not around yesterday, I shared a scenario where I was able to identify a TP target right between the $105 level and the $116 level. And how did we come about that? Well, very simple. We identified this impulsive move that started in the month of June, that took price all the way from $123 right into the $85 mark here. And we were able to run the Fibonacci retracement tool through the length of this impulse leg, and we identify the golden zone area as an area for our take profit target. So the golden zone area is right between the 50% and the 78%, 78.6% of the previous impulse leg, and so that's why we have that TP target zone within that area. So anywhere around this area is okay to marking your take profit target for this bullish momentum that we're expecting for this week. So, and that will be dovetailing to about how many pips, at least a minimum of 8,200 pips to a max of about over 2,000 pips to catch here, if price move as expected. So our bullish momentum on the US oil still remains very valid as long as price action continues to oscillate right above the $92 level we identified yesterday. So this is what we are looking forward to for the week. So for those who are in the trade already, I kudos to you guys for identifying that. And for those who are not yet in the trade, we were able to identify a trading opportunity as we will be looking forward to a retest of structure, that is price coming back into the structure or probably this bullish trend line here, where we will be looking for reversal pattern on lower time frame to join the rally to the upside. It could be an outright retest reversal pattern, or it could be a sharp rejection of that level. So whatever pattern comes in, just be ready for that bullish momentum to take advantage of that move. So that is that on the US oil. So it's unfortunate that I'm not able to communicate with you at this point, but I'm hoping that this is going to be resolved before the end of the session. So what we want to be doing here is to move on to the next pair, and the next pair we want to be looking at is the which pair is that? Let's see which pair we talked about yesterday. We talked about hold on a second. The next pair we deliberated on is the US tech. So the US tech has been moving in our favor so far, at least since last week. We've been enjoying that bearish momentum on the US tech, and price remember during the course of yesterday's trading session, I told you to move your stop loss to right above that $13,000 level so that we can protect our position against any sudden move to the upside, which we've done, and price is yet to hit our stop loss. So if you are still in this trade, well, that is we should still hold on to the position as it is right now. And for those who are not in this trade, or probably those who did not take advantage of this move right from this point, how do we intend taking advantage of an opportunity today? So well, first of all, I want us to look at the weekly time, the higher time frame rather, to see how price has been doing so far. If we still need to continue this bearish momentum, or we need to take a pause, take our profits. Let's see what is happening. So well, on the daily time frame, the bearish momentum still holds. We are able to identify that bearish trend line after connecting the series of lower highs. We can see we had lower highs here. We were able to connect that series of lower highs, and we had a structure around here where price did a consolidation phase that turned out to transposed into a reversal pattern that took price to the downside from here. So since last week, we've been enjoying that bearish move, and let's see if that bearish move is still going to hold for today, or there is a likelihood that a retracement of that bearish move might happen. So one thing we want to be doing at this point is to zoom into the current structure we have here. So let's zoom into the current structure we have here. So we enjoyed this bearish move since last week that took us right into the TP target zone, which we identified between the $12,900 level and the 12,400 level. So right now price is right at this point, and if we look at the structure we had here, the candle that closed yesterday, what do we see here? We can see that the candle, the volume of the candle appears to be diminishing. Look at what we have here compared to the previous candles we witnessed in the last couple of days. We saw how engulfing those candles were, but yesterday we saw a candle that closed with a pattern that looks like a doji, giving us an indecision on the market that participants are probably thinking, or probably the buyers are probably coming in to take the price further up, probably in the form of a retracement phase. Now, if we look at the structure we have here, we saw the breakdown of this bullish trend line here. Price took us right into this. So From a technical perspective, we should be expecting that if after a breakout or breakdown of a structure, we expect price to come back and do a retest of that structure to give us further confirmation to join the potential decline or rally. So at this point, since we are on a bearish momentum here and we saw the breakdown of that structure, when is the retracement phase back into that structure going to happen? Is it about to start today? That's one question we want to be asking ourselves. Is it about to start today, where we're going to be looking for another selling momentum right at the retest of that bullish trend line? The bullish trend line here, that dotted black line we see on your screen. So that is something we want to be looking at. Then another thing I want to show us here is the structure here on the daily time frame, where we can see our price has respected that area, where buyers have respected that area. Buyers have gathered here to push price to the upside at some point in time. The early days of the month of August, we saw potential buying opportunity from that level, and right now price is right at that area. So what we want to be doing here is to be mindful of our existing position on this one. So it's appropriate that we move in our stop loss close to somewhere around below the, probably above the $12,900 level, to lock in some profit at this point, as we never can tell what is going to be happening from this area. So what I want to be doing here is to identify this level as a potential demand zone, considering the structure we saw in the past. So let's give this let's label this. We label this area a demand zone. So we have a demand zone sitting right inside this area. So there is a likelihood that we could be witnessing a reversal pattern from this point that will take price back into that bullish trend line, or probably somewhere around the area price started this week. Then we could be looking forward to another reversal pattern that will send price going to the downside. So this is what we identified here on the daily time frame. We have a demand zone already identified. So let's scale down to a much lower time frame, where we want to see if we can identify a reversal pattern within this area that will give us that clue of a possible bullish momentum happening today. So now scaling down to the 1 hour time frame, what do we have? So we want to see what has been happening within this demand zone in the last 24 hours. So we can see, what do we see here? We can see that we have a consolidation phase right within that demand zone here, giving us a clue that there is a tussle between the buyers and sellers. So buyers are trying to push price up, sellers are trying to hold on to their momentum at this point, and who is going to win this tussle? So we don't know who is going to hedge out on this one. So the first thing we want to be doing here is to identify the structure we have here within this consolidation phase. So what I'll be doing here now is to zoom in, bring out our line chart, and let's identify what structure we have at this point. So let me delete this. This is no longer necessary. This is no longer necessary. So let's bring out our line chart at this point, and if we do that and connect the series of lower highs here, we can see we have a perfect structure that we could use to guide our action going forward. So what I want to be doing here is to thicken this a little bit to emphasize its importance at this point, and then let's give it probably a red color to make to emphasize the importance of this line at this point in the market. So that is one line we saw here. So what we want to be seeing here, hold on a second, we identified that then there is this demand zone here, this demand structure here. There is this level at the 12,850. Is it 12,800? Okay, let's give it 12,830. We have a level at 12,830. 12,830. So we are trying to label this so that we don't get things mixed up, so that we can okay, let me extend this out. So we have something that looks like a triangle pattern here. We can see since price broke down the $130 level, we've been seeing a consolidation phase that looks like this, price respecting that bearish trend line, but at the same time the $12,830 level has been holding price action supported. As you can see, sellers were unable to break below this $12,830 level, and it appears the buyers are very strong at this point. So one thing I will be suggesting here is to move your stop loss. If you are still in the selling position here, move your stop loss to somewhere around above the $12,900 level. That is that. Then one thing we want to be looking forward to here is if we see an outright breakout of this red line here, that is, we see an outright breakout of this trend line, what we want to be, that is going to give us a signal that this is a bullish moment. This is a bullish signal that is price appears to be transposing into a reversal pattern. So if we cite that signal, we don't want to get too excited. First, we want to wait for confirmations, which is likely to come in form of a retest of this bearish trend line, or probably this level at the $12,830 area. But the most important thing we want to see is a reversal pattern on lower time frame supporting a trend continuation to the upside. So we could be looking for a double bottom structure, a sharp rejection of this level, that is after the breakout of that structure, to join the rally to the upside. So if that happens, right above this level is most appropriate to join right above this bearish trend line is most appropriate to join the rally if that happens. And where will our take profit target be if we are going to be joining a rally from here? Well, if we look at the structure we have here, we can see where price started this week. Hold on, let me share with you what I'm talking about here. Price started at around the $13,200 level, somewhere around there. This is where price started this week. So let's see how price is going to relate with this level. And if we look at the structure we have here, we can see that we have a bearish trend line that has been holding price action since last week. We saw this price respecting this area. We saw it respect this area. We can see, then we saw the breakdown of this level. So probably like price is likely going to come back into this trend line here. Let me extend it out a little bit so that it will serve us for a future, serve us in the future. So we have something like this. So we want to see how price is going to relate with this level during the New York session today. That is, if we see a breakout of that trend line, we want to see how price will relate to this level. If we see reversal pattern below that level, then that will be a sign that we should join the trend continuation to the downside. So if you are a counter trend trader or probably a short-term trader, you could actually take advantage of that move after the breakout of that structure, retest of that structure to the downside. You could take advantage of that move, which could be giving about 300 pips minimum on this one. So if that happens, you could join. But if you are a long-term trader, you want to wait for selling opportunities at probably this area or this area. So what we're going to be looking forward to on these zones are reversal patterns. So we want to be looking for reversal patterns within this area to continue to sell. It could be a double top structure like this to sell from here, or probably from this point, the bullish trend line we identified on the daily time frame. So this is what we are going to be looking forward to on the US tech. So that is the first scenario for any bullish momentum here on the US tech. Now, hold on a second, let me delete all this. Let me delete this and this. So now, if price continue in the direction it has been in the last 7 to 8 days now, and we see an outright breakout of the $12,830 level, that is another signal that we are going bearish. That's confirming that our bearish momentum we entered last week is still very strong. So what we want to be doing here, if we see a breakout of the $12,830 level, is to wait for a retest or structure which is likely going to come in form of a retest of the $12,830 area, or probably can go as far as the bearish trend line here, where we want to be looking for a reversal pattern on lower time frame to join the trend continuation to the downside. So if you are not in that bearish trade yesterday that we took on Monday, and you think you still want to join this decline, then you want to wait for price to break down that $12,830 level. Then we wait for confirmation, which is going to come in form of a retest of the $12,830, or probably this bearish trend line. Then you could take advantage of a trend continuation to the downside. And if you are going to take that selling opportunity with our take profit target, remember we identified this take profit target zone between the 12,900 and the 12,400 level area. So anywhere around here is most appropriate for our take profit targets. We still have about a maximum of 450 pips to catch here, as we are still within that zone. So let's see how price action plays out in the next 24 hours, as we be on standby to take advantage of any opportunity lining up for us on the US tech. So my chart is still yet to come up. I don't know why. I don't know why. I'm still yet to. Okay. So in the since I can't communicate with you guys, I just have to just roll on with my analysis, and I hope we all understand what I'm talking about. And unfortunately, I'm not able to welcome any inquiry. So let's move on to the AUD USD. The AUD USD pair is another pair we talked about yesterday, where we were actually looking for a bullish momentum here yesterday. And hold on a second, let's see what's happening here. So we had a scenario here on the AUD USD yesterday where we were waiting for a bullish momentum, and that bullish momentum was supposed to be expected after a breakout of that 0.6900 level, which actually happened during the New York session yesterday, and price came back to do a retest of that level, and you must have taken advantage of that move right now. But one thing we are seeing right now is a bearish momentum happening on this candle. That is the 4-hour candle I'm seeing on my chart right now, and we don't know how far that is going to go. But if you are already in this trade, you will be at break even at this point. So let's see if we can still hold on to this trade, or we are going to get out of this trade. So before we do that, I want to scale up to the higher time frame so that I can allow those people who are not with us yesterday to be parts of the picture, because some people might not be with us yesterday, and it's appropriate that I make sure that everybody are on the same page. So how did we get to this point? So we scaled up. Let's scale up to the daily time frame. So on the daily time frame, what do we have here? It's obvious that price action has been on a bearish momentum drive since April this year. After we were able to connect the series of lower highs here, we can see we connected the series of lower highs here, but something interesting happened during the later part of August stroke the early days of the month of the later part of July stroke the early days of the month of August. We saw this breakout and multiple rejection of this bearish trend line, giving us a signal that price is no longer respecting that bearish trend line. So since we saw that breakout retest, we begin to prepare ourselves for a possible bullish momentum at this point. Then what did we see during the early days of the month of August? The first week of August, we witnessed this engulfing move to the upside as we had an impulsive move which took price to as far as the 0.71390 area, and that is a breakout of that structure. That's a signal at this point in time considering the structure we have here. And if we have a breakout of structure like this, we expect price to give us a confirmation, which will definitely come in form of a retest of that structure. So right now we have this signal right now, so we expect price to come back into the bearish trend line here to give us a retest of that structure to give us confirmation of a trend continuation to the upside. So this is what we were looking forward to, and what happened since the beginning of the week gave us supported this direction. So we continue to see multiple rejection of this level, opening our highs into a possible bullish momentum that's likely going to be happening this week. So when we saw this, the next thing we did was to scale down to the 4 hours time frame so that we can see things more clearly. So when we scale down to the 4 hours time frame, the thing we noticed here on the 4 hours time frame is that the 0.6900 level had held price supported multiple times in the past. We saw a scenario here in July we saw our buyers gathered here to push price to the upside from here, and during the early days of the month of August we saw our buyers push price from this point, and right now price has been consolidating within this area since the beginning of this week, giving us a clue that this level is a buying niche. That is, buyers gather here to, as in buyers see the 0.6900 price cheap enough to buy the Aussie against the dollar. So with that scenario here giving us further confirmation that a bullish momentum is very, very possible at this point, we saw an outright breakout yesterday that took price out of the 0.6900 level, giving us a further signal that this bullish momentum has come to stay. Now we saw this retest of structure, we saw multiple rejection of the structure, then we took advantage of this move, and right now price is right back into our entry zone. Now we want to decide if we still need to be in this trade. That is, for those who already took advantage of this trade, do we still need to stay in this trade? And for those who are yet to take advantage of this trade, should we prepare ourselves to get into this trade? So this is what we want to look at on the lower time frame. So let's scale down to the 1 hour time frame and let's see what is happening here. So on the 1 hour time frame, following this impulsive move that happened yesterday, we saw two bullish engulfing candle that took price out of this structure here at 0.6900 level, and we saw price appears to be doing a retracement of that impulsive leg. So when we see an impulse leg like this, we expect that the retracement phase should happen, but where should the retracement phase end? Well, from a technical perspective, I'm expecting that retracement phase should end within our golden zone area, which is between the 50 and the 78.6% of the previous impulse leg. So what are we talking about here? Let's bring out our Fibonacci retracement tool. Let's run it through that previous impulse leg here, and what do we have here? So let's identify that selling zone, which is right between the 50 and the 78.6, buy zone, 78.6%. So what we want to be doing here is to identify this area as our buy zone for the New York session today. So for those who are still in this trade, you can still feel comfortable in this trade at this point, as we're still within an area where buying possibilities can still happen. And for those who are not in this trade, you can be preparing yourself to take advantage of a move right within this level. So what we want to be looking forward to right now is this. Since we already saw this impulsive move to the upside, and this is likely going to be a retracement phase of this impulse leg, so we are waiting for this retracement phase to end, and the only way we will know this retracement phase has ended is when we sight a reversal pattern. So we want to be seeing a reversal pattern within this area. It could be a double bottom structure. We want to look out for reversal patterns here, breakout retest of structure on lower time frame, then we can join the rally to the upside. So this is what we want to be looking forward to on the AUD USD. So if price moves out of this buy zone, then I will be advising that we should be closing this position, especially for those who are taking advantage of this move. We should be closing our position, and that's going to be a small loss of about, let's see how many pips that is. That's about 20 pips thereabout. So let's prepare ourselves for buying opportunities within this buying zone, that is between the 0.68790 and the 0.69100 area. So we are still on track on the AUD USD. If you are in the trade, don't panic, but if you think you're not okay, you can close it, but get prepared to enter back when you sight a reversal pattern here. So for me, I'm still in this trade. Well, I am probably around the entries. I'm around the entry zone here, so I'm in a little loss, like 0.1 or 1 pips loss at the moment because of this selling candle that is happening right now. So let's see how price plays out during the New York session on the AUD USD, and where is our take profit target here. So let's scale up to the higher time frame to identify that. So on the higher time frame, like the 4 hours time frame, the reason why I have set my take profit target within the 0.70800 area and the 0.71500 area is this. If we look left, we can see that we have a structure here where buyers have gathered to sell the Aussie dollar sometime last week, and there is a likelihood that if price come back to that area, we could be witnessing a selling momentum from that area that could push price down. So we want to be mindful of how this area price is going to relate with this level. Are we going to be having a breakout of that level, or are we going to be having a reversal pattern from that level? We don't know. But to be on the safe side, we should be placing our take profit target within this area, that is between the 0.70800 area and the 0.71500 area. Somewhere around there is okay to place our take profit target, which will be dovetailed into at least a minimum of 200 pips to catch if price moves in that direction. So on the AUD USD, we are still expecting that bullish momentum to happen, since we are still right above the breakout retest of the structure we identified on the daily time frame. So that is that on the AUD USD. So let's be on standby to take advantage of that move, especially for those who are not in that trade, and for those who are in the trade, you can still stay in. I'm still in this trade and hoping that we see a reversal pattern right within that buy zone. If I see a reversal pattern within that buy zone and I see a breakout retest on lower time frame in the direction of the upside, I'm going to add more position to my existing trade. So that is that on the AUD USD. Then we moved on to talk about the USD Jpy. Now on the USD Jpy, from a long-term perspective, we were actually expecting a bullish momentum on the USD Jpy. Remember, let's scale up to the higher time frame so that we can see how we got to where we are today. So on the daily time frame, we drew a bullish trend line after connecting the series of higher low on the USD Jpy. And one thing we observed during the course of last week's trading session, since the beginning of the month, is that we saw our price transpose into a reversal pattern right above that bullish trend line. We saw the first touch of that 130 Japanese yen level. Then price came to as low as the 132. You can see didn't go as far as the previous low, and this transported into a double bottom structure, which is a very, very strong reversal pattern, especially on a higher time frame like this. Then we saw an outright breakout of the neckline at the 135 Japanese yen area. So since the beginning of the week, we've been expecting that move in the form of a retest, that is price come back into our neckline zone, which will probably share a confluence with that bullish trend line. We want to see price come into this area, form a reversal pattern on lower time frame, then we can join the rally to the upside. So this is what we've been waiting for since the beginning of the week on a long-term perspective. However, I shared a scenario here yesterday where I said, while waiting for that bullish move to happen, there is a likelihood for those who love doing counter trend opportunities to take advantage of this move to the downside here, where we long-term traders will be waiting for that buy opportunity right from this area. So for the counter trend opportunity, I shared a setup which we could likely take advantage of. and I shared something here with you yesterday where I said a breakdown of that bullish trend line or a breakdown of the 136.750 area and a retest of that level could give us an opportunity to join the decline to the downside. Lo and behold, we had this happen during the course of the New York session yesterday. We saw this move to the downside here, and price appears to be doing a consolidation phase at this point. So we don't know how this consolidation phase will happen. So for those who are joined the counter trend opportunity, kudos to you. But should we still remain in this counter trend, or we wait, or you get out of this trade? That is something we want to be looking at today and get ourselves prepared for the New York session. So now with the structure we have here right now, since we already have a breakdown of this bullish trend line here, is there a likelihood that price could come back to do a retest of this bullish trend line, where we look out for that counter trend opportunity to join to the downside? That's one thing we want to see here. So now if let's bring out our line chart at this point and let's connect this pattern together. So we have something like this. Hold on. Make this. So we have something like this. We have a low here. We have a higher low here. And when you see an higher low, what do you expect? You expect that a bullish momentum is likely happening. And if we look closely into the structure following this impulsive move to the downside, we have the first touch here. We had price come into the 136.750 level. Price came back, do a second touch to find a higher low, and we have a neckline here. So this likely turning out to be a reversal pattern. So it's likely that we might see price break out of the structure back into that bullish trend line, after which a move to the downside to that place where we are expecting to buy the dollar against the Japanese yen at the 135 area. So for those who took advantage of this counter trend opportunity, well, I want you to be locking your profits at your entry point, as there is a likelihood that price is going to break out of that 136.750 area, and if it does, you should be waiting for that reversal pattern here to push price to the downside. And if price comes back to the downside here, this is the right place for us to take a long-term bullish position on the USD Jpy. So this is my scenario here on the USD Jpy, and I hope I made myself very, very clear at this point. It's so unfortunate. Let me check the chart one more time if I can connect to see. It's saying network restricted here. I don't know why that is. Okay. All right. So let's move on to the next pair. The next pair we deliberated on was the XAU USD. Beautiful. We took the gold, and on the gold we expecting a bearish momentum on the gold yesterday. Remember, we were expecting a bearish momentum on the gold yesterday, and how did we go about that? So let's scale up to the higher time frame. Let's see how we got to this point. So on the higher time frame, let's go to the weekly. On the weekly time frame, it's a very, very, very long-term bullish momentum, which went as far as back as 2016. That's about 6 years, 6 good years. Price has been trending to the high side. However, if we zoom closely into what has been happening in the last 2 years, we can see that price has been caught up within a consolidation phase right between the $2,050 level and the $1,700 level. You can see how price has been caught within this level. So in the month of February, we saw a sharp rejection of the $2,070 level, and price came back to the $1,700 area. And since the last month, we've been seeing multiple rejection of this area. Now, I have another temporary trend line which was identified here, and price is right around that bearish trend line. You can see here, price is right around that bearish trend line, making that area a very, very sensitive zone. So we need to be very, very mindful of how we are going to take our trades from this point, because price oscillating right around the trend line, it's a very, very significant level. And the reason why that is because there is a likelihood that price will respect that trend line one more time and go to the upside from there, or we could be having an outright breakdown of that trend line with a retest of structure to push price to the downside. So that is why we need to be very, very mindful at this point. So what did we do here is to scale down to a much lower time frame to look at what structure is giving us at that point. Now, when we scale down to the 4 hours time frame here, we were able to identify another bearish trend line here after connecting the series of lower highs. We can see the first touch here in the month of March. We saw the second touch in the month of April, and somewhere around there, though it wasn't as close as the previous touch, around the month of June, and we can see multiple rejection of that level during last week's through this week trading session, giving us a clue into the strength of the sellers at this point. So despite the fact that we have a very strong bullish momentum on the higher time frame, the structures we have here on the 4 hours time frame is saying something different, in the sense that price is being dropping to the downside, then coming back into that bullish trend line we identified on the weekly time frame. So with the structure we have here now, we need to see things very clearly, how the market has been evolving in the last 2 weeks, and let's see what happened since the beginning of this week. So what we did was to scale down to the 1 hour time frame. So on the 1 hour time frame, what we had here was we saw our price has been consolidating between the $1,750 level and the $1,745 level since the beginning of the week, before we saw this breakdown to the downside. So this move to the downside gave me a signal that for this week, another selling momentum is very, very possible, because you can see price did not break above the $1,750 level on Monday. We saw price consolidate between that level and the 1,745 level between Monday and Tuesday before this breakdown happened. So this is a signal for me that we should be anticipating bearish momentum on the gold for the week. So what I said yesterday was that we should be waiting for price to come back into the sell window around this area, where I said we should be looking for a reversal pattern within this point. But unfortunately, that did not happen, though price came into that area. We saw the first touch, price came back down, but we saw an engulfing candle taking price out of that area, hereby negating that selling window. So what I want to be doing here is to delete this area. So now the second thing we were looking forward to at this point, now that we saw this engulfing candle that took price right back into the $1,754 level, and if you look at this level, you can see how this level has also held price supported or resisted at one point in time in the past. You can see what happened around this area during the last week trading session. We saw what happened here. So that's more or less a very, very strong level we want to be looking forward to this week. So now that we've identified this level here at the $1,754 with a bullish engulfing candle running into the $1,754 level, and with multiple rejection happening at that level, this gives me a clue that a selling momentum is imminent. And consider the long-term bearish momentum we saw here on the XAUSD that has started since June. we 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 should be looking for selling opportunities at this point. So price came back down into this $1,754 area one more time, and then we saw another sharp rejection of the $1,754 level, which is transposing into a double top structure. And from a technical perspective like this, when you see a double top structure like this, the next thing you want to be doing is to identify the neckline area, after which you want to be seeing a signal in the form of the breakdown of the neckline. So right now, with a potential double top structure unfolding right now, remember, this double top structure is not yet confirmed, as we need to see a breakdown of the neckline to give us a confirmation that this is actually a double top structure. So what we want to be doing is to identify the neckline. So we bring out our line chart so that we can get specific points of entry, specific points of connection. So we have the $1,754 level as our key level going forward, and this will also serve as our yardstick going forward for this week. So now that we have a level here, hold on, let's give this a label. We have a neckline at the $1,745 level. So we have, let's place this right at the bottom, and then let's put it on the right hand side. I think it's too big. Let's give it. So we have a neckline sitting right around this area right now. So let's see if this is going to transpose into a double top structure. So we have this move to the upside. We had the first rejection, price came back. We saw the second rejection with engulfing candles, and this candle is yet to close, as we have this candle has about 4 minutes left for it to close. So one thing we want to be seeing here is an outright breakdown of that neckline, which will probably share a confluence with this bullish trend line we identify here. Then remember, we don't want to get too excited at the sight of a signal. We want to wait for further confirmation, which is likely going to come in form of a retest of the neckline or this trend line here, after which we look out for patterns on lower time frame that supports a trend continuation to the downside. So this is what we want to be looking forward to on the XAU USD for today. So let's see how price is going to play out. Are we going to be having that outright breakdown of the neckline to give us that signal we're looking forward to? And if that happens, where will our take profit target be? Well, let's see. The last time we had an impulse leg, we had it around this point. So we want to be bringing our Fibonacci extension tool to run it through that impulse leg from here, so that we can aim at the 127.2, between the 127.2 and the 1414 area as our take profit target. So right between the $1,715 and the $1,720 area seems most appropriate for our take profit, which will be dovetailing into a maximum of about 300 pips to catch here if price moves as expected. So this is what we want to be looking forward to here on the XAU USD. Our selling momentum appears to still be valid at this point. Take profit target right between this 1,700 and what did we call it, 15 and the $1,720 level. And let's see what happens during the New York session. However, like usual, we always want to have another scenario just in case price did not move as expected. So what we want to be looking forward to here, if price decides not to break down that neckline and price continue to find higher highs, which leads into a breakout of the $1,754 level around this point, then that is going to give us a signal that we might be having a short-term bullish momentum. I said short-term because if we look at what has been happening since the month of June, we can see that price has been on long-term bearish momentum here. So we don't want to jump into conclusion that this is a bullish momentum, an outright bullish momentum. So it's likely going to be a short-term bullish momentum, which may come in the form of a retest of truth. Probably price will come back into this bearish trend line to send price crashing to the downside. So we are still going to be very, very careful and mindful of this bearish trend line here. As long as price is still right below this bearish trend line, we still want to be holding a bearish bias on the XAU USD. And if we finally have the breakout of this bearish trend line, then we could be thinking of a long-term bullish momentum on the XAU USD. So this is my scenario here on the XAU USD, and I hope I made myself very clear. Like I said, I'm still not able to connect to my chart so that I can see what is happening in the forum, but it's okay. I have tried as much as possible to make our job easier and more simpler to take advantage of any opportunity lining up for us on these pairs. So the last pair we will deliberate on today is the Euro USD, which I shared. I think that was the last pair we took yesterday. And let's see what is happening. So on the Euro USD, we were stopped out on Monday. Is it Monday? Yes, we were stopped out on Monday after this engulfing candle happened. We were actually expecting a selling momentum right below the 0.99500 level, which did not happen as we saw this sharp move that took us out of this position, and then we were stopped out, though we had some profits early on Monday with about 50 pips there, about to 50 to 60 pips, but we were taken out here on during the course of yesterday's trading session. So now I made the second scenario I made mention of here yesterday was that if we see an outright breakout of 0.9950 level, we want to be looking forward to price coming back into where it started this week, which also shares a confluence with the resistance level of the descending channel, where we want to be looking for patterns to sell the Euro USD. But with the structure we are seeing here in the last 2 hours, it appears that price is not going in that direction. As we can see, the rejection of the $1.00 level appears to have pushed price to the downside. So what I want to be doing here is to bring my key level for the week to 1.00. So let's relabel this one to serve as the new key level for this week. So we give me a moment. Let's relabel this 1.00 level. Okay, this is our new key level for the week. We can see how this level has been a major determinant of price action in the past. We saw the breakdown here. We saw a sharp rejection of this level. So if you are taking advantage of that move, that is the sharp rejection of that level to the downside, kudos to you. You will have been running with about how many pips in profit right now? With over 80 pips in profit at this point in time. So now for those who had missed this move, that is those who had missed the second entry here, how do we intend taking advantage during the New York session today? Well, what we want to be looking forward to is another key level that will be guiding our action. Now, if we look left, we can see that we had selling niche around this area. In the past, we saw selling niche around this area, and we also saw selling niche around this area. So let's look at the mean of this area. I think the 0.99500 area still holds at this point. So let's bring out my line. Let's connect it. Let's bring out our line chart here, and let's connect this point and this point together to have an area. So 0.9950 still holds. 0.99500 level still holds. So for those who had missed this move right from this point, then we still have another possible place to enter this trade. That is, if we see price come back into the 0.99500 level area, probably one more time to retest it, and then look out for patterns on lower time frame that supports a trend continuation to the downside. And if we have a breakdown of the support level of this descending channel, a retest should multiple rejection of this support level should give us welcome opportunities to add more position to our existing trade. So let's see how this next candle is going to close. Is it going to come back into the 0.99500 level to reject it and come to the downside, or is it going to come as far as this level, the $1 level again, to come to the downside? So for the Euro USD, I'm still expecting a bearish momentum here, so we should just look out for that opportunity to take advantage of that move. So how do we know which we can take advantage of a certain opportunity? Well, look out for reversal patterns. It could be your double top structure, your head and shoulder pattern, your rising wedge, whatever it is. Look out for patterns around this area to join the decline to the downside. So if that happens, where will our take profit target be? Well, let's look at the previous impulse leg here. We have this leg before this move happened. So we want to be running our Fibonacci extension tool through that leg. Then we aim at the 127 point, between the 127.2 and the 1414 area, which will fall around, let's see where that is. That is around the 0.98500 area. So TP target should fall around this area. So let's label it inside. Let's put this inside here, and we have something like this. So we have within this area as our TP target. So if you are joined from here, you have about 150 pips to catch here, and if you are going to be joining from this point, you have about 100 pips to catch from this point, which is not bad for the week. So that is what we are going to be looking forward to on the Euro USD. I hope I made myself very clear, and this is going to be the last pair we're going to be deliberating on today. So let's quickly run through what we did so far today for those who didn't join us from the beginning. So the first pair we deliberated on today was the US oil, where we took advantage of this move after sighting the breakout of that $92 level we've been waiting for since Tuesday. Then we saw a consolidation phase around here. We took advantage of this move to the upside. And one thing I said is this: for those who missed this move, we could be waiting for another opportunity to buy the US oil if we see a retest of structure. It could be a retest of this structure here, or it could come as far as this bullish trend line here. Then we look out for patterns on lower time frame that supports a trend continuation to the upside. So if we continue to the upside like this, where will our take profit target be? Well, on the higher time frame, we were able to identify a possible place where we could place our take profit target. Remember, we are on a very strong bullish trend line on the US oil on the higher time frame, and what we did here is to find the retracement phase of this impulse leg, and we identified the golden zone area that is between the 50 and the 78.6% of the previous impulse leg as our take profit target zone, which will be dovetailing to at least a minimum of 1,200 pips and a maximum of over 2,000 pips to catch here on the US oil. Then we moved on to the US tech, where our selling momentum on the US tech is still very valid. And one thing I told you here is that you should be moving your stop loss to somewhere right above the $12,900 level. And the reason why that is simply because of this. Right on the 4 hours time frame, we were able to identify this demand zone at the 12,800 level. After looking at what structure has done in the past, here we can see our buyers gathered here to buy the US tech during the early days of this month, and right now price is right back at that zone. And what's made us very curious at this point is the consolidation phase that we've been experiencing from this zone in the last 24 hours. That is, sellers were unable to push price below the $12,830 level, and that gives us a clue into a possible reversal pattern that could be happening at that point. So on our 1 hour time frame, what did we do on the 1 hour time frame? The thing we did on the 1 hour time frame is to identify a structure. We identified this consolidation phase here to see what is actually happening. And what were we able to see? We saw this bearish trend line. Price has been rejecting this bearish trend line. We hope that this bearish trend line continue to guide price to the downside. But one thing that happened here is at the $12,830 mark, we saw multiple rejection of this level, giving us a clue into a possible buying power from this area. So what I said here is this: if we see an outright breakout of this trend line here, we should be seeing it as a signal that a bullish momentum is going to be happening. Then a retest of structure with patterns on lower time frame that supports a trend continuation takes us out of that zone back into where price started this week, which we can see we have the bearish trend line here. So let's see. That's a counter trend opportunity for those who want to take counter trend opportunity. But if you're a long-term trader, you want to wait for price to come back into this low level to sell the US tech or this bullish trend line we identified on the daily time frame. However, if the $12,830 level is broken during the New York session today, that's a signal that the bearish momentum we've been enjoying since the beginning of the week is still very strong. So what we want to be doing is wait for a retest of that structure with patterns on lower time frame that supports a trend continuation to the downside to join the decline to the downside. Remember, we are still within the TP target zone, which we initially identified during the early days of the week. at between the $12,900 area and the $12,400 area. So anywhere around here is okay for you to place your take profit target if you are joining it for the first time. So we still have about how many pips right from below the 12,830. We still have around 450 pips to catch here on the US tech. Then we moved on to talk about the AED USD, where I told you that I'm still expecting that bullish momentum to happen here. During the since the beginning of the week, we identified the 0.6900 level as our yardstick. We are waiting for price to do a breakout of that structure, which happened during the course of yesterday's trading session. Then we saw the price come back to do multiple rejection of the 0.6900 level, and we joined the rally to the upside. But unfortunately, price appears to have come back into our entry zone, and we are not sure if price is going to continue to the upside. But one thing I said here, when we scale down to the 1 hour time frame, is that we should not be in a hurry to get out of this trade, as we were able to identify a buy zone here after running our Fibonacci retracement tool through the previous impulse leg to identify a golden zone that will guide our action going forward. So I said, for those who are already in this trade, you want to still hold your position at this point. As long as price is still within the buy zone, we are still okay to buy the Aussie dollar. However, if price breaks below the buy zone, then we could be thinking of getting out of that trade. So one thing I said here is, if we see a reversal pattern here and price breaks out of that neckline one more time again, I want to be adding more position to my existing trade. So where is our take profit target on this one? Take profit target still remains around the 0.70800 area and the 0.71500 area, which will dovetail to at least a minimum of 200 pips to catch here on the AUD USD. Then we went on to talk about the USD Jpy, where I was able to paint a couple of scenarios where let's look at the daily time frame here. On the daily time frame, we identified the reversal pattern right on above this bullish trend line, giving us a confirmation that the bullish momentum on the USD Jpy is still very, very strong. We saw this double bottom structure, a strong reversal pattern. We saw a breakout of the neckline at the 135 Japanese yen area. And one thing we're expecting since the beginning of the week is for price to come back to do a retest of the neckline here, which also shares a confluence with the bullish trend line to give us further confirmation to join the rally to the upside. So this is what we have been waiting for since the beginning of the week. However, I told you that since we are waiting for a bearish move to happen, that is, price will come back into the neckline, a selling momentum will be imminent at this point. And that is for those who love taking counter trend opportunities. As if you're a long-term trader, you want to wait for price to come back into this position to take advantage of the long-term bullish momentum for the USD Jpy. So for those who love taking counter trend opportunity, I was able to identify an area where we could be looking forward to. We identified this bullish trend line here, and we said, okay, fine. If we have a breakdown retest of that bullish trend line, or probably breakdown of the bullish trend line, break down the bullish trend line, retest of the bullish trend line, or retest of the 136.750, we could take advantage of a selling momentum that is going to be leading to the buying zone that we identified on the higher time frame. Lo and behold, that happened during the course of yesterday's trading session. We saw the breakdown retest of that zone and price continuing to the downside. But one thing we identified today was this bullish trend line here, that we had a new low which is higher than the previous low, giving us a clue that we could be having a reversal pattern. As you can see, we have this impulsive move. We saw something that looks like a double bottom structure, and we could be having price come back to do a retest of this bullish trend line, where a reversal pattern here could be sending price going back into the buy zone that we were looking forward to since the beginning of the week. So that's what I said here, and it appears things are moving in that direction. So let's see how this is going to play out during the New York session today. Then we went on to talk about the gold, where I told you how we're expecting a selling momentum here on the gold, and the structure we saw here in the last 24 hours appears to be transposing into a double top structure. And if you look at the engulfing move that took price right into the $1,754 level yesterday, we saw a sharp rejection of that level. Price came back into this point, then we saw another sharp rejection of that level here, hereby transposing into what looks like a double top structure, a reversal pattern. But this is not yet confirmed, as we want to wait for price action to give us that confirmed structure in the form of a breakdown of the neckline identified at the $1,745 level, after which a retest of structure should give us that confirmation to join the decline. With the take profit target still sitting at around this $1,716 level, we still have about 3,000 pips to catch here if price move in that direction. So that's that on the XAU USD, and we close the day with the Euro USD. And on the Euro USD, we identified a couple of levels, and for those who took advantage of this move from this point yesterday, that is, we saw the breakdown of the 1,000 level. Price came back to do a sharp rejection of that level. If you are taking advantage of this move, kudos to you. You will be running with over 70 pips in profit at this point in time. And for those who missed this trade, I was able to identify the 0.99500 level, where I said if price comes back into the zone with multiple rejection of the zone, you might want to join the decline to the downside. And if price breaks out of that zone, that is, we see a breakout of the 0.99500, then we could be waiting for price to come back into that 1.00 level. Look out for reversal pattern from that point, then you could join the decline to the downside. So with this being said, where will our take profit target be? We were able to identify a take profit target zone at around the 0.98500 area after extending the impulse leg using our Fibonacci extension to running through this level. So in this regard, this is what we have here. So if you are taking that move from this 1.00 level, you should be having about 150 pips to catch here by the end of this week. And for those who are going to be taking it from this point, you'll be having about 100 pips to catch from this point, which is not bad at all. So this is what we want to be looking forward to on the Euro USD. The bearish momentum appears to be still very, very strong at this point in the market. So let's see what happens in the next 24 hours, and we shall be coming back here again tomorrow to look at how well this position have been doing so far. So thank you very much for being around once again. Unfortunately, I'm unable to talk with you guys, but I hope this is going to be resolved tomorrow, and we will have that that privilege to relate again. So thank you very much. I do hope I made your day, and remember, you don't get too excited at the sight of a signal. You want to wait for further confirmations to happen in the form of a retest of your structure before joining whatever momentum that you can see on your chart. Thank you very much. I wish you best of luck during the New York session today, and have a wonderful day. Bye bye.